Hi, I'm Garth McKenzie from traderscorner.co.za. In this episode, we're going to take a look at your weekly look at the S&P 500 and the Nasdaq. There's been some interesting movement there over the last day or so. So let's get straight into it and let's take a look at the S&P 500 daily chart as a beginning. Now here, we're going to take a look at the fact that the market actually reached the prior high that we saw in early June up at 32.35 yesterday. And then it seemed to stall at that area and reverse down quite meaningfully in the afternoon session. What that means now is that it's closed the gap that created in early June. There was what looked to be an island reversal on the chart at that stage. That gap is now filled. The price has retested the prior high and it seems to have reversed down from there. Now, we need to see whether there's any follow through to the downside following yesterday's reversal or not. By and large, one's still got to give the general rising trend the benefit of the doubt here, but it does look as if we could be entering into a range trading environment now where that 32.35 region that was reached yesterday is the peak, and then down at the bottom we've got 3,000, which would be the bottom of the range. You can see that back in May we saw a similar range trading environment where the market was range bound for about a month, and eventually it broke to the upside. So it might not be too surprising to see us trading in a range now for the next month again. If we then move on to the hourly chart of the S&P 500, here you can see this more clearly. You can see the top and the bottom of that range that I mentioned very clearly. Down at the bottom, we've got 3,000. That's the lows of the last couple of weeks. And then up at the top, we've got 32.35, which is where the market peaked yesterday. Interesting to note that yesterday the market made a gap up, which looked a bit like an exhaustion gap, and then it sold off quite heavily into the end of the session, and it ended around 80 points down off the session high. So quite a meaningful reversal on the day there. And if there is some follow through on that reversal, then it could suggest that we may see a move down towards the bottom of that channel. Then let's move on to the Nasdaq, and this is actually more interesting. There's been a lot more strength in this market than there has been in the S&P 500 recently. This is obviously a very tech-heavy index, so your big heavyweight stocks that are leading in the tech space really drive this Nasdaq market higher, and hence we've seen the Nasdaq making a new all-time high versus the previous peak in February. The S&P 500 has not done that. But here again, what's interesting to note is that the market made a very clear bearish engulfing candle yesterday. At one point, the Nasdaq was up by more than 2% on the session, and it ended the session down by more than 1%. So a very, very significant turnaround in the fortunes of the Nasdaq on the day yesterday. And you can see quite clearly a big bearish engulfing candle registered on the day yesterday. Overall, that rising trend is still very much intact, so we can't say that this is now the end of the bull run and that's it and it's all over. It's just an indication that perhaps in the short term, this market's got a little bit ahead of itself and it needs to consolidate a bit. There is quite a lot of support lower down at about 10,400, and then further down at around about 10,000. And if the market were to retrace back into that rising trend line, that wouldn't be too unexpected. The last chart here is the Nasdaq hourly chart, and this just shows the recent trading activity more clearly. There you can see yesterday an exhaustion gap to the upside, and that was quickly met with selling pressure, and the market then sold off throughout the rest of the session. And as I mentioned, at one point being up 2%, ending the session down more than 1%. So quite a meaningful reversal on the day there. The rising trend that I mentioned comes in at around about call it 10,100, and there's also a gap in the chart at 10,400. So those areas would not be uncommon to see the market retrace down into that sort of area where it may then find some support. So for the short term, it just looks as if this market's a little bit overcooked and it started to show some signs of stalling up at these upper levels. But no reason to get significantly bearish. Just note that perhaps a little bit of consolidation is in order in the near term. That's all I've got for you for the S&P 500 and the Nasdaq for this week. I'll be back again later this week with some more analysis, and again next week with a look at the S&P 500 and the Nasdaq.